Good evening, pro traders, or good morning, depending on wherever it is that you are in the world. And welcome to our Monday market review for the primary Forex markets that we look to trade. And as always, if you are enjoying our material, please don't forget to hit that like button on this video. And if you haven't already, then you must please subscribe to our channel. Or certainly, if you're interested in receiving updated professional training on a regular basis, from professional traders. Right, so the theme for the market last week was initially a continuation of quite a lot of the activity that had taken place through the course of the prior week, which came to a pretty abrupt end on Thursday and brought to an end a lot of our trades that were capturing those trending markets. Followed by a few overlays, which helped to scoop back some of the losses or lost profits that we had to give back. In any case, it was an okay week at the end of the day. Some people did better than others, but again, that really comes down to selection criteria, how aggressive you are, and also, of course, what strategies you are trading. All right, so let's just have a look at what happened. First of all, here we are on the Euro-US dollar on the weekly time frame. And noting that we are still in a trend on this currency pair, but we did have a low ring last week, which means that we're now in a retracement wave of that trend. It's coming up to test the what was support, now resistance level in this area. And let's wait and see what happens during the course of this week. You can have a look on the daily time frame. You'll notice how it has tested this resistance level. Now is day 5, in fact, of some of that activity. So we are obviously waiting, as always, as price action traders. We wait and see what price does around these levels. This could certainly be an interim retracement, typical ABC pattern over here. For those of you who are Elliotticians out there, then looking for a new bearish impulse wave on that higher time frame, which we would look to obviously capture using our core strategies. All right, so that was the Euro-USD. The cable, not quite as exciting when it comes to, certainly on the weekly time frame. You'll see we are very much inside of our channel here. Technically, it is still a trend, albeit a very weak one. We are inside of the channel, and we're looking to see if any kind of bearish cyclicity does ultimately establish itself. Need to see a resumption of that US dollar strength that we saw previously. But here on the daily time frame, you'll notice that it's been pretty bullish. And through the course of last week, we in fact had a breakout of our HTC channel, which gave our channel traders a chance to do something with that. What we're looking at the moment, in fact, is not just the fact that we are outside of the channel, but we also have a potential valid class 1W pattern. So for pattern traders as well, this is looking pretty good to go along. Now, we can always look to try and assume that US dollar strength is going to resume. But remember, we don't try and predict the market. All we do is we trade what we see. And at the moment on this currency pair, that's precisely what we are looking at. So let's keep an eye on that. If we get this low ringed, then it'll mean that this now support level has been respected, and we're looking to trade this in a bullish direction. All right, so dollar yen up next. First of all, on weekly, just having a look at how last week brought an end to that significant bullish breakout that we previously had. Again, that was USD strength, but coupled in this case with yen weakness. That came to an end with a trend, which was that wave, came to an end with two-phase twos here. Got a nice bearish overlay, which hit take profit on Friday. Let's see if this continues at all. So nothing at the moment for us to do after we got that overlay trade. All right, so dollar Swiss again. Let me just go to weekly first, just to show you that another pair where we do in principle have a trending market here, certainly a potential trend, but it's shown weakness by coming back inside of the channel and not respecting this level as a support level. Now, we spoke about that before, but last week's bearish impulse candle really nailing that home. So nothing much for us to do here except wait and see. Perhaps longer term we'll get another bullish impulse wave. Otherwise, we just sit on our hands especially when it comes to using this as our execution time frame. But daily is a selection time frame. As you can see, we got a breakout last week on Wednesday, and we obviously wanted to jump all over that. And as soon as we had that, we applied our core strategy, the H4 impulse on this one. You'll see this morning we've had quite a strong retracement come back to this 1, 2, 3, 4, 5, 6, and it's not quite having stopped us out. Remember, using our trade management methodology, in this case, we would still have survived that. That's what makes these trade management rules so valuable, is that they really recognize the cyclicity of the different time frames. And obviously, as you know, on the H4 impulse, we use a 3-6 rule. All right, so that trade is still running. We've been in that now since Thursday, I think it was. Looking at USD Cad first weekly, nothing really for us nothing to interest us there. But that bearish impulse candle, if you like, on weekly as well, looking like this on daily. Technically still a trend, because we did get a bearish impulse wave of this lower low, lower close here. But that low ringed on Friday at the end of the week. And not only that, but we've had a close back inside the previous phase 2's price territory. So, you know, from a bearish point of view, at best, the best thing we can look for here is a class 2 M pattern, which isn't enough for the pattern traders. However, if we do get another close outside of the channel, then we potentially could be looking to drop down to the lower execution time frame, being H4, looking to trade this in a bearish direction. Right, moving along a little bit more rapidly. Let's look at weekly first. So here we had another test of our LPO channel here on the weekly time frame. Look, it's still early in the week, but it is pushing outside of that channel at the moment. However, we needed to get a close outside of the channel to be able to use the daily, let me just go to that quickly, as an execution time frame. But we can't. So the best we can do is say here on Aussie, we can still use this very much as a selection time frame. We did get a trade towards the end of last week. We had 2, in fact. But the second one, it just missed the take profit. We were talking about this on the weekend and with our mentoring program. And yes, it's frustrating when that does happen, but the exact opposite can also happen. So that's just the way way it goes. So at the moment, however, we have noticed a breakdown in bearish cyclicity. So we've got a phase 2, and looking to see whether we get a resumption of bullish cyclicity on this time frame. Right now, if you're an aggressive trader on the hybrid, you'd certainly be looking to take an entry, or maybe even have already gone long with a class 3 W pattern this morning, and that would be doing very well at the moment. So that would be nice if you grab that one. For the slightly more conservative traders, you'd be looking for an initial retracement and then a class 1 or class 2 W pattern to give you that H4 impulse to go long on this one. And it's looking promising, certainly. Kiwi, as we know, again, let me just show you on weekly first. We are very much inside of the channel. It's there's zero cyclicity there, but we did get a continuation of that bullish move last week, which you can see here on the daily time frame, giving us a breakout early in the week from the top of the HTC channel and providing some trading opportunity. I think we did certainly at least have one trade over here, which did okay, but then that also broke down, and we ended up getting that breakdown in cyclicity as well. Similar thing, though, to what we saw on the Aussie. This is a phase 2 wave, folks. Remember, it doesn't mean just because it's longer, it's an impulse wave. It's not. That is a test and a failed test of the support level. Therefore, we've got phase 2 seeing a breakdown in that bearish cyclicity, and therefore a strong potential resumption showing itself here as well. All right, so that's the majors and the minors on our US dollar pairs. Let's have a look at the yen pairs. Just chopping and changing between time frames over here. First of all, on euro yen, here on the weekly time frame, last week just giving us that high test or inverted hammer candle, which looks like this on daily. So pretty aggressive turnaround during the course of last week, which is a bit of a shame. But we did get a pretty easy setup as soon as that happened here on H4, with that breakdown and bullish cyclicity giving us a very straightforward bearish overlay. And we were just chatting about this in our session on Saturday, so you can just ignore some of this. But yeah, again, you know, we potentially, because we do have a very strong trend here on the daily time frame, we don't yet have a second impulse wave, meaning that it's still a potential trend, but it is still looking very promising. So noting again here on the lower time frame, and if I just get rid of some of that, right now bearish cyclicity is still intact here. So unlike some of the US dollar pairs that we were looking at, we haven't yet seen that breakdown in cyclicity on this time frame. But looking for it at the moment, we've had a retracement back to the 4-hour 55 EMA, so that daily phase 2 may well be done and dusted. But we sit in our hands and we wait until the market gives us the required level of information. Similar picture across many of the yen pairs. So here on GBP yen on daily is a selection time frame, same kind of thing. So you see very strong continuation through the course of last week, giving us a couple of really nice trades. When that came to an end, likewise, we had a slightly smaller winner on an overlay. So that also just helped to boost our results for the week. And again, as I say, the bearish cyclicity is still intact here, which means that phase 2 is still very much intact. Let's continue to watch this space. Similar thing here on Swiss yen, looking at daily. And folks, I'm not spending too much time on a weekly, of course, because many of them are showing exactly the same kind of picture with this bullish breakout of the channel. And what's nice about this one as well, of course, is that we've had a very strong W pattern, class 1 W pattern, which allowed us to get a couple of those H4 impulse trades in. And ultimately, when that eventually did break down, however, the overlay on this one didn't actually work. But that's fine. We got enough winners elsewhere using that approach. And CAD yen here on H4, representing a similar pattern of bearish cyclicity as we've seen across the yen pairs in particular. So that's all pretty much the same kind of pattern. Remember, folks, we've got to be a little bit cautious about how many of these trades we do take when we do get the setups, because of risk management. You don't want to be overly exposed to any one currency. And Aussie yen, same kind of picture, daily to 4-hour. Cyclicity still intact on these yen pairs, not quite the same as the dollar pairs. Daily here on Kiwi yen, and again, cyclicity intact there. So let's just, as I say, keep watching to see what happens across those yen pairs. All right, so moving to our euro crosses, we spoke a week ago about the fact that we had that bearish breakout on this. Didn't really do much with that, of course, because it's just messed about, continued to test or sit on top of that preceding support level that it had established, and then Friday just pulled back again. So there was nothing for us to do there. I won't waste any time on these. Euro Swiss, we did have a continuation, but as is typical with this currency pair, it was continued to be relatively messy. However, some folks I know did look to jump into a bearish daily impulse, which is probably one of the very few daily impulse opportunities that we saw through the course of last. Anyone who tried an H4 impulse, though, I think you were disappointed on this one. It didn't really go very much further, and the action today is really a complete breakdown in that bearish cyclicity. So, yeah, definitely nothing for us to look at right now. Euro Cad on the weekly, also you'll notice last week's candle, bullish inside candle. So really an abrupt end to that extended bearish run that we had on this pair, which was nice and profitable, but a breakdown in cyclicity here on daily. So yeah, we absolutely are not looking to do anything further here. And we haven't even had a setup for an overlay there. So here on Euro Aussie Weekly, we have seen a continuation of this bearish impulse wave inside of the channel. No valid M pattern there either. So nothing we can do there as far as the using that as the selection time frame is concerned. But when you drop down to daily, We do still have cyclicity intact here, unlike that preceding instrument. So what we're obviously looking for over here, if I just get that line out of the way, is also a bearish resumption. So certainly got our eye on that one for the week, using daily as our selection time frame and H4 for execution. Euro NZD, different story here, because of course this is outside of the channel for those of you who are channel traders. Last week giving us that another bearish impulse candle. Looking at the daily, for those of you who took a daily impulse at that after that previous pullback, that was a nice winner, but we've got another pullback in train at the moment. So a couple of potential setups here for daily impulses. And of course, if we do get a resumption of these trends, then we're also looking to trade that with our lower time frame core strategies as well. Gbp Swiss, moving on to the Gbp Crosses. This has really been absolutely nothing for us for quite some time now, visible both on weekly and daily, so completely not of interest. Gbp Cad, something we traded up until a couple of weeks ago. You'll notice that last week was another high test candle, a bit of a doji or spinning top. So far, it's continued to close outside of the channel. But we've had that low ring now as of the end of last week. So definitely a bullish phase 2 or retracement wave on the weekly time frame. And really, you can see that through the course of last week. That's all we had. In fact, the last couple of weeks, these well, including today, 11 candles, not much happening there at all. So what we could look for, however, is a bearish impulse candle. If we do get that, then we could look potentially again to short this market. What's good about this one is that this resistance level has been pretty much respected through the course of the last couple of weeks. Right, Gbp Aussie, inside the channel, no valid patterns, nothing changed from previously. And we did get using the daily as our selection time frame, we did get a breakout candle on Wednesday's close, I do believe, but as you can see on Thursday, it pulled straight back inside of the channel. And also just bear in mind, you know, if you are a WM trader, then this was not a valid pattern at all. However, we are seeing potentially a resumption in this. Remember, this trend is technically still intact, although it showed weakness last week. But if this continues in a bearish direction and remains outside of the channel, then for channel traders, as long as your entry is outside of the channel, you're ready to roll. Remember, one of the more conservative selection criteria is that you could not trade this because what we call our point B is also outside of the channel, and until we have a confirmed bearish phase 1 wave, you might want to leave that alone as well. But that depends on your selection criteria and how conservative they are. Right, Gbp Nzd, which really has been nothing for quite some time, finally gave us a bearish breakout last week. But that literally was on Friday's close. So we could only start looking for this as our execution time frame as of today. So let's see what happens if we do get a bearish impulse candle here. That would absolutely be a valid setup to short this using this as our execution time frame here on daily. As far as using daily as selection, however, we had that breakout already early in the week last week. I think that was Tuesday, and we looked to start trading that on the H4 time frame already from Wednesday. So using core strategies over here, plenty of opportunity to get in. That cyclicity did break down towards the end of the week, however. So that really brought this to a distinct halt at that point in time. But that cyclicity, now that bullish cyclicity, which is the bullish retracement wave that technically on the daily time frame we are still in, looks like that cyclicity has also broken down. In fact, it has broken down, which means we're looking at a potential bearish resumption here. And in fact, the current candle, when this closes in just over an hour's time, when you're watching this later on today, you can have a look to see if this was a valid setup or not to go short here. So definitely some potential on GBP Nzd. So a couple to look at there on our GBP crosses. Looking at some of the others here on Cad Swiss Weekly, you can see last week continued to respect that resistance level and in fact rolled over and gave us a bearish impulse candle. I treat that, as you know, as a ringed high. So, and we can safely do that. So this already now an M pattern, which of course is bearish, coming back down into the channel. And you can see here on this time frame, complete breakdown in the bullish cyclicity. We already had that a week ago. In fact, it retested that high on Wednesday last week, rolled over, gave us a setup for a bearish overlay, which we would still be in fact. So if you remember, we give it 2 candles, give it a chance for 2 whole candles, and then we use the aggressive trailing stop as well as a proportional target. Right, looking at the Aussie crosses quickly, Aussie Swiss, very much inside the channel here on weekly with no valid pattern. We got that temporary breakout, which sucked a few of us, I must admit, including myself, into lower time frame trades here on, when was that? I think Wednesday, yep. And didn't work out. As you can see, it all rolled over quite aggressively on Thursday, but we got a perfect setup for a bearish overlay, went straight to a full take profit on that. So that helped me to scoop back some of my, the loss that I made with this, this breakdown in bullish cyclicity. So overall, it turned out fine. Aussie Cad, weekly time frame, so nothing really doing here. For folks who want to look at trading, this is an overlay with a breakdown on this bearish cyclicity on this time frame. That would be quite aggressive, obviously, but in any case, that's fine. That means you would have actually entered this the trade first thing this morning for a weekly bullish overlay. On the daily time frame, that's somewhat bullish activity through the course of last week. Looks like this, where we did in fact get a breakout of our HDC channel. So quite interested to see what happens further over here. Bearing in mind though that this breakout is only visible now that we have progressed our analysis with this ringed high, which we only got at the end of Friday. So in reality, there was nothing for us to do there because the channel boundary was in fact all the way up here during the course of this bullish wave. But it has rolled over. We may well be getting ourselves a ringed low. That'll be a single candle wave with this bearish engulfing candle. So if we drop down to our lower execution time frame, you'll see there is potentially bullish cyclicity starting here as well. So let's keep an eye on that. Not necessarily as strong as some of the other pairs that we're interested in trading. So again, just watch out for not overexposing yourself. Last of the Aussie pairs on Aussie Kiwi, we had a bearish resumption with the previous week's high being ringed. Nice bearish impulse candle last week. So this is a trend that is still very much intact. Not only that, it is still a strong trend with this class 1 M pattern. So that's pretty good as a selection time frame. However, we are still waiting for a pullback and then a bearish resumption here on daily if we are to use that as our execution time frame. When it comes to using this as selection time frame, of course, we can't do anything. We've had a complete breakdown in cyclicity, no trend here, and no valid pattern of any kind. So really the only thing there is some potential for daily impulses through the course of this week. Let's keep an eye on it. Right, Kiwi Swiss deep inside the channel on weekly, just that bullish high test or inverted hammer candle, and that really represents this false, well, it's not actually a false breakout yet, but we did get a breakout of this channel, but it pulled straight back inside of the channel again on Thursday with that pretty aggressive retracement. So nothing doing there, but it is potentially a valid W pattern if we get this low ringed, which we may well get at the end of today. And if it does close above the previous candle's high, thereby ringing that low, we will also be outside of our HDC channel, giving us the opportunity to look for low time frame core strategies or core trades. Okay, Kiwi Cad weekly again, nothing doing. Yes, I mean, it's a nice strong bullish impulse candle, but really the only thing that counts there is the fact that we've got a potential Class 1 W pattern here on the daily time frame. So all of that Canadian dollar strength having run its course 2 weeks ago, and we're looking at the market going back in the opposite direction. So for those of you who are looking for the a Class 1 W pattern, we may well get that at the end of today. And again, allowing us to drop down to H4 and go for it from there. Right, so that's it for the currency pairs, and a quick look at gold. Some interesting activity last week where we had quite a big candle here on the daily time frame for gold. So it was pretty choppy on Friday, as you can see. Now, at the moment, this is technically a bullish trend, albeit weak, with this phase 2 encroaching on the price territory of both the previous phase 2 as well as the HTC channel. So not something that we're specifically looking to trade at the moment. Just having also, I have to comment on the fact that the stock markets have found a way to make new all-time highs yet again. So here we have the Dow. It just amazes me how much money they're printing on that side of the pond. But anyway, for those of you who are there, I hope that hyperinflation doesn't set in too quickly. But at the rate at which your Fed is printing money and that money pouring into the stock markets is definitely a harbinger of interesting times to come, as they say in the Chinese idiom. Okay, so that's the daily time frame. Hasn't yet closed outside, but we're above that preceding resistance level. Definitely testing it at the moment. Let's see what happens. It's going to be an interesting week. And of course, here we have the S&P doing something very similar. But as always, I like to look at the Nasdaq. Not quite as ebullient, of course. Here on a weekly time frame, you can see it hasn't actually gone up to test those previous highs yet. It may well do so. But remember, the likes of the Dow is much stickier than these markets, where people are much quicker to move into and out of risk. And at the moment, the overall risk appetite that this represents is not as high as one would expect. If the market really was going for or had a real appetite for risk, then the Nasdaq would be leading the Dow. Instead, it is trailing it. So, as I say, we don't know what's going to happen. We're not predicting, but definitely we are living in interesting times. All right, folks. Well, as always, I hope you're getting value out of this, and I hope it's helping you to understand how to analyze charts correctly, as well as, especially for those of you who are members, understanding how best to apply the strategies, the convex strategies in particular, but also how to develop convexity across your account and thereby produce a consistent profitability over time. So for those of you who are not members, please make sure that you do subscribe to our channel. We do produce, as I say, lots of free training from professional traders to assist you in your trading. And hit that notifications bell, because otherwise you won't know when we bring out the latest stuff. And of course, if you do have any questions for me, you are absolutely welcome to drop those into the comments below. All right, folks. Well, that's our market review. I hope you've enjoyed it. I will see you later in the week. Bye for now.